Folks, we back again. It's Tuesday, Creative Finance with JB. We are excited this week because I've decided to take a moment and just focus on something that's really going to help some folks out here in this industry of home buying, investing. I put a lot of people in place that can share some of their thoughts and visions with you on that investing and home buying. And I just want to, got a little dark in here. I just want to pass this on to you and let you know what's going on. So we have this thing in place that we need to know and have the experience to be out here and make some good financial decisions when we're buying a home, when we're buying investment properties. How do we know what it is? How do we know what to look for? These resources are provided for you just so you'll have that. I'm not going to tell you I'm the end all be all. It's questions, is how you interview someone when you're doing your home buying, when you're going out here to really look and to get a value, to make sure that you can feel the comfort with that person so they can answer your questions. Are they going to take time with me? I'm new to this process. Are they going to answer those questions? Are they going to keep me where I need to be informed? And will I be able to get to the closing table? We see a lot of stuff on Instagram, Facebook, as you always hear me say, that 0%, you don't need no money, you don't need this. But the key thing is you have to remember is that you want to have the best situation possible out here in this market. You want to present yourself as the strongest person. I like to give the analogy of it's almost like an interview. You're interviewing for a job. You have 100 people that's coming with you to interview. How are you going to show up at your best? What are you going to do to make sure that you meet all the needs of that person or that employer that's trying to hire the best person to suit their benefits? It's the same thing with the house. That seller want to make sure they pick the right buyer that's going to be able to purchase their home so they can move on to the next step of their journey. This week, I'm going to talk about home buying first. Home buying, everybody here is, home buying, get pre-approved. Make sure you have your money in line. Make sure you have your ducks in a row. But the thought process is, I'm going to buy a house. I'm going to have to meet a lot of sellers, probably. If I'm an FHA buyer, if I'm a conventional buyer, I'll probably meet a lot of sellers. I'm going to meet a lot of competition out here because I understand that rent rates is just equivalent to mortgage rates. And then I'm going to have to figure out which one's going to suit me best. Is this first home is not going to be my forever home, more than likely. It's probably going to be a home that I'm going to be able to go and start off with, build up a little bit, improve it to where I like it to fits my needs, stay in it 3 to 5 years if that's feasible, if my family grows longer, if possible, if it fits you, and then move on. Don't be overwhelmed with the process. Take it step by step, move accordingly, and don't let any question go unanswered. Every question has to be answered. Every question has to be deeply thought through for it. And so the first thing question is going to be, what is the first thing we should do when we're looking to buy a home? When we're looking to buy a home, I have said this so many times, and I'm going to keep saying, make sure your credit is correct. Make sure that you have everything in order on your credit. What do I mean by everything in order? Make sure your address is right. Make sure you don't have those collections on there. Make sure if you don't have those charge-offs on there. Make sure that all your bills was paid on time within the 12 months. Make sure we limit the amount of inquiries we have on there for it. Those are things when we talk about look at your credit. Freeannualcredit.com provides you with those resources as well to help you on that journey. And as they helping you on that journey, use it. Get it to where it needs to be. Make sure your credit stays up and you stay credit worthy for it. And make sure you are able to understand what's going on. Somebody might say, "Oh, I don't know what that is on my credit." Find out. Find out. Look at it. Figure out what's going on. How is it happening? And what are we going to do about it? Don't ignore something just because you don't agree with it. That's not the method to get this done. For the best thing to do is go on here and figure out, hey, I got a problem on my credit. Hello, Isabel. Hello, Regina. I got a problem on my credit. What should I do with it? Call the creditor. Discuss your options. See if they're going to be able to work with you to get that thing paid off, get it paid for deletion, understand that you overlooked it, and know your rules, know your rights when you're doing this stuff. Understand the process. Interview, and once you do that, set yourself up to where your credit score is in a good situation. No, not a whole lot of inquiries. You didn't go out to a car dealership and got 20 inquiries where we have to write letters of explanations on there. Our underwriter is there to make sure that we have a good loan. It might be some tedious stuff they ask for. It might be some things that you be like, what is it? Why do you want to need this? They need to protect the interest of the bank, the interest of that loan, to make sure it is a viable loan, to make sure that that loan that you're getting is not going to be foreclosed upon. We have somebody that has worked hard that's going to be able to pay that mortgage and going to be able to stay in that home for a long while until they're ready to sell it and make on-time payments, for everything of what it is. So, the first thing is, how do I locate a good lender? I'm going to encourage you to interview that lender. Interview that person you're dealing with. Sit down and have a conversation with it. It's almost like anytime you're going in to buy anything that's a large purchase, a car or, furniture and stuff like that. You ask those questions. You do the same thing with your lender. You see who they are. You see what they're offering. You ask them what's the terms. This is what you're looking for. Set your expectation at the beginning of that interview. Make sure it goes according to what you want to hear. And then you know if you got to move on or you got to find another lender. I know folks referred folks to this. The realtor might say this the lender I use and stuff like that. That's fine and still interview them and have a conversation with your friend or whoever referred them. Say, hey, they're a great lender, but they might not fit me. Or, oh, this is perfect. I think I'll be able to work with them because they're going to be able to answer my questions and provide me with the resources I need to do this. Good relationship starts with open communication with your lender. It gets you to where you have to be. It gets you to understanding and feeling comfortable of what's happening. You should be able to talk to your lender just like your friend and be like, hey, this was going on. I have $30,000 saved. My goal is to probably put $20,000 down. I want to use that 10 for my moving expense. I want to use some more money when I get in there, buy my pots and pans, curtains. I'm probably going to need some furniture in there. So I want to really hold on to this $10,000 that I need for my move in. Oh, why you think $10,000 you need for that? And you have to explain that. You have to break that down, and you have to get it to where it needs to be. For it, I'm going to go in reverse for a minute, and I'm going to talk about the 4 C's of credit analysis from a lending standpoint. The capacity. Can they handle this loan payment? That's as a loan officer, I'm coming to you. My first thought process is, can they handle this? Will they be able to manage this payment? And let me see how they're gonna be able to manage the payment. Oh, let me look at their credit. That this is my thought process from finding your loan officer. Oh, let me look at their credit. How do their credit report look? Yeah, look at this. It looks good. That's good. That's good. That's good. Um, yeah, they had a little hard time here. So I'm gonna have the conversation. Hey, John Doe. I see. It looked like in 2024 you had a little issue during this month with a couple of late payments and stuff. Tell me where you're at with that, and so we can have it. It's not to pry and to dwell on the past. It's to make sure that we have an understanding of where you're at in your walk. Because sometimes we make emotional decisions, but our credit provides that information we need to see. Or I go down and it's like, hey, within the last 3 years, you had 5 addresses. I mean, is that accurate on your credit report? Can you tell me what happened? And you might say, well, this is my grandmother's address. I was staying with her to take care of her. This is my mom's address where we all moved in together so I can watch both of them. They weren't doing too good here. This was my apartment that I had for cosign for my daughter, X, Y, and Z. Whatever it may be, those addresses, make sure you have those answers, because guess what? The underwriters are going to ask you those answers as well. They're going to ask you those questions. They're going to want to know why you have so many addresses on that credit report. Hey, I see you did a lot of inquiries. You got 20 inquiries here. I went to that car dealership and they told me they had 0% financing. And the guy said he can get it and I'll let him run my credit. And that's what he came up with. So my question, how many loans did you get? Did you get one? Yeah, I got one. So all these inquiries here probably hindering your credit, and we're going to need to address those when we get to underwriting. Those are key items that we need to be aware of on our credit report when we say, oh, I see you had a collection here. Yeah, I see it's not paid off. What's going on with Verizon? What's going on with Comcast? What's going on with T-Mobile? What's happening with this credit card? Those are questions that need to be addressed so we can prepare for the underwriter. Because I say they're there to protect the loan and make sure that we have a good loan. Make sure that loan is clear, free, and we're not going to have no conversation. Next C is capital. Do I have the capital to purchase this home? I'm going to be honest with you. $500,000 home looks better than some of a home that's $250,000 because it might be new construction. It might be more appeasing to us. It's easy on the eyes when we trying to look at it and analyze it. We figure we're gonna have less problems and stuff, but you have to have capital for that. FHA loans requires 3.5% down. Conventional loans start at 3, can be 5% down. USDA loans is 100% financing based on the DTI and debt to income ratio. So I can break that down for you. And for it, so you got to look at it. You got good credit, debt to income ratios, and your ratios must be in a good thing. VA loan, 100% financing, but it has to be more in depth to where you have to be with that. VA loans gonna have deep appraisals, but guess what? We take lower credit scores and we're able to make it happen for it. And by doing this, you're able to know how much capital I need. VA loans are 100% down, just like USDA. The other loans is going to require money down if you're not in those category or those class of works as well. So the capital is interesting. Now the collateral. The collateral is that home that I'm going to buy. Is that home really worth $400,000, or did somebody mark it up like that? We'll get into that as when the lender set you up appraisal and all that. But we have to look at that to see that value. So that's a conversation as we're going to go into our next thing, talk about our realtor, to see if that comparable in that market you have. So the collateral that you're choosing is going to be feasible for what the bank's going to give you money for to lend on. So we understand the importance of credit, interviewing your lender, how your lender interviews you. It's an open conversation. Have a good conversation. Do not get offended or just say, hey, explain to me what you're trying to say. Because I might say to you, can you explain to me what happened here with late payments and stuff here? I'm not trying to be judgmental. I'm trying to prepare us for underwriting. I'm trying to get us to that next step of understanding the process of being able to get that loan to close. So you be able to have that conversation with me. We all messed up, we all fell short, and we keep going because now we're trying to get you set up. When I'm doing this and evaluate, I'm trying to get you set up for your pre-approval, not your pre-qualification. I'm going to tell you the difference between that right now from a lender standpoint. A pre-qualification is you filled out the application, the information looked good on the application, the credit looked good, and you qualified based on what you completed and what I'm seeing on this credit report. Taking that all that information is as accurate as possible that you put on there, and that I can analyze it and I can get you approved for a loan. The pre-approval comes when I have your bank statements, your income docs, your ID to see who you are for, and I have those pay stubs, your W-2s to show you've been working 2 years. And I perform a search and a research on all those documents to see if we qualify for the amount of loan you're looking for that you'll put on the application. Please understand that you might save $500,000, but if you make $45,000, $50,000 a year, it's very unlikely that can happen. I'm not saying it can't happen, but it's very unlikely, depending on all the debt you have in your debt to income ratio, because that plays a part as well. So your pre-qualification is not going to work when you're going to look for a house. You want to be pre-approved or even conditionally approved. Conditionally approved mean that I gave in all my things. Johnny done sent this to the underwriter. The underwriter came back and gave me some conditions. Like, we ready to go. Let's find the house. Let's evaluate the house. We got all the income and hard stuff out the way. We just need to see the value of the house and make sure that equals up so we can close quickly. That helps the process. Having all these documents ready at the time of you filling out the application is perfect timing. Like I said, don't be an emotional buyer. You can't be emotional in this game of buying a home. You have to really think through the process, be ready to step forward, and be ready to make that step to go to the next level. And guess what? And do it intentionally and with understanding that, hey, you're in a trusting relationship here, and you're asking the questions possible. Somebody said, you think this will get approved? Based on the information we have, yes, that will get approved. That will go forward because we use a system which is called DU Desktop Underwriting, or LP, which does an automated review and gives us approval or referral eligible, which means that you're going to do a manual underwrite from a lender standpoint. When a manual underwrite means I'm going over your credit report. I'm checking your last 12 months, on-time payments. I'm doing everything manual versus going through DU. It's approved. Once it's approved, we just ask for documentation that suffices, that pops up in that approval category. You interviewed the lender. You got your credit together. Everything's in order. You're able to answer the questions. You suited. You done did the 4 C's. You got the capacity, the credit, the capital, and the collateral. You interviewed the lender. Lender done had a discussion with y'all. Y'all done talked. The lender done interviewed you. for it. Now we come to the point that he's going to give me a pre-qual. He's going to give me a pre-approval because pre-qualification only happens based on the application. He's going to give me a pre-approval or a conditional pre-approval, either one for it. Once we got that, Now we're interviewing our realtor. We're finding the person that's going to meet our needs. We're finding that person that's going to be able to talk with us, walk us through this house process, let us know about the area, let us know about comparables in this area, let us know what the average house value is, able to meet with them, let them know that we have a pre-approval, what we're trying to do as well, and let them know that, hey, I'm financially set. I got my pre-approval or conditional pre-approval. I'm looking for houses in this house range. This is the area I would like to be in. I would like your expertise on what do you think about those areas. For having those types of answers for them is pre-approved. For your realtor might say, oh, what kind of loan are you getting? You might say, well, and I'm going to go back over the loans. You're either an FHA candidate, you're either a conventional, you're either USDA, you're either veteran. Please understand these different types of approvals can affect the area that you want to look in. If you're in a USDA area, it's a rural area. They say undeveloped, but you can have some development there, and that approval is only for that area. Please don't try to go to the city and try to use a USDA loan. It's not going to work. It's not going to fit the criteria there. It's not going to be where you need to be. If you have an FHA loan, you have income guidelines on it. So, hey, you might make a whole lot of money, $200,000-$300,000 a year, and you're trying to get an FHA loan because they have a lower rate, and the market in Newcastle County only said that the highest loan value you might can get is $850,000, and you're looking at a $900,000 home. That's not going to fit you. That's not going to fit your criteria either. So you have to understand that, hey, this is why your realtor is asking you these questions. This is why they're going and trying to see where you need to be. Now, you're conventional. You're almost open to any place available. You can also look at, hey, jumbo, where you can be over that $900,000 or $1 million mark to get that loan. And you're doing some good things. You same thing with VA. You got to make sure you have your you got to make sure you have your certificate of eligibility. Make sure that it's still eligible, and make sure that you have registered or you have gotten that certificate, or if your lender needs to go get that certificate of eligibility. That is so important in this process of what it is. How do I know which type of loan I fit up under? How do I know which type of loan is best suits me? We have so many people that have their theory of how we classify. If I don't have a lot of money down and stuff, and everything, and Isabel, that's right, being educated on this house is very helpful. If I don't have a lot of money to put down on this, I'm probably going to consider FHA or USDA, depending on where I'm looking for a house at. For FHA would be your most considerable. If you're going in rural area, I would say USDA, because they out there in the undeveloped areas, as I was telling you. And in those areas, guess what happens? You might find a good house. It might not be as close as to all the supermarkets and entertainment and all that stuff you need. But guess what? You can find a decent house for it. FHA, you can find it. You're going to have 3.5% down. You probably can qualify for a down payment assistance program, which would be good for that. So all that conversation you're having with your realtor, because it's already came from your lender. We already discussed that with you. We already talked to you about what you qualify for. So if your realtor comes back and says, "Oh, see if you can go conventional," you need to be upfront and honest. Hey, we looked at that. I don't fit that category because of X, Y, and Z. So your realtor won't waste time looking in that area. Well, it might take a little bit longer. Yeah, it might take a little bit longer. And this is the reason why. Could I go conventional? Yeah, Miss Realtor, Mr. Realtor, I can go conventional, but my price point ain't gonna be 400. It's probably gonna be 275. They can say, okay. So now we know what we're doing. So when they're going and send you these automated listings and houses, they know what to send you. You don't want them to put some data in there that they sending you. Um, um, the data that they put in there, that it's not accurate to what you want. Because you'd be like, why are they sending me these houses here and stuff like that? Because that's the data that they got, and that's the data that they completed for it here. So interviewing, talking with your realtor, having that conversation makes it real smooth and easy for them to try to locate you that house that you're looking for, that home that you might need to be ready for, and go from there. And you want to know, for someone undecided, please go the benefit of owning a house. What is the benefit? Why does that fit me? You control your monthly payment. Unlike when you're renting, it can go up every year. You stabilize yourself in a property that's yours, that gain equity, that you're paying, and you're having a benefit from it in the long term of having equity for, and something that you can own and pass down in generational wealth. Those are our keys for owning a house. So when you're talking to your realtor and you letting them know, you're telling them, hey, this is my goal for this. My goal is, hey, I might be in here 3 to 5 years. um, and then after that, I plan to probably just go and upgrade my home. I plan to get married, have some kids in the future. I'm dating right now, and X, Y, and Z. So your realtor can say, "Oh, okay, we can set this expectation of what you have and do," so they can have the relationship for the next into your next step of your journey. Pay you for that and let you know, hey, you might right now and go over that. If you are undecided and you don't know, ask the question. Say, hey, what do you recommend? If you are in my situation, this is where I'm at. I work in Newark. I don't mind driving. That helps me moving. I want to buy something that fits my ballpark, 275 to 400, if I'm FHA or conventional. And now, what do you recommend? Where do you recommend me going? And explain to me why you recommend me going there. Those questions, those conversations, they really go hand in hand, to where y'all having that conversation. And your realtor's very appreciative of that. They love that. They love that for the fact that they're not playing this guessing game of, I think she might be okay in Newcastle, but I know she live in Bear, and so it's not guessing. It's really fundamental of what it's supposed to be. Our question was, how much money should I have available? Folks, I'm gonna be honest with you and give you the thing. And I want you to think like this. If you're buying a $400,000 home, I'm not telling you, but just think of 10%. Johnny, where do you get that number at? 10%. I'm just using that as far as down payment. If you're FHA, 3.5% down. If you're conventional, 3% down, or 5% down. VA and USD, it's going to be less because you don't have that down payment. But normally, I would say 10% down. If it's more left over, that's more to prepare you to have in your bank account. So if something happened on a rainy day, we can be able to have money available for us to do things. If you want to do some upgrades in the house, you'll have that money. I say 10%. The knowledge is your down payment, and I'm going to use worst case scenario here, conventional 5% down, right? Transfer tax 2% down, um, loan origination fee and title charges, another 2 to 3% down, escrows, taxes, reimbursements, another 1% down, maybe two. So you come up with that 10% down. That money covers those expenses. Johnny, what if the seller gives me help? That's wonderful. That's extra money you'll have in your pocket. But what should you have available is the question here. What you should have available is that amount of money. I got 25% down. I got $25,000 down, Johnny, but I want to get a down payment assistance program. That's still good. So you still, with that down payment assistance program, does it equal 10% of what you're buying that house for? Does it equal that amount of money um, that I'm going to need? And how should I get to that point of getting that? You got to start saving. You got to start really cutting back so you can put that money up. People always say, "Oh, tax time, put that money up." Yeah, tax time. Tax time is nice. Put that money up, but still every month save money. I had another lender. They used to come out at the beginning of the year with how to save $10,000 or $20,000 within a year. That was a perfect program because it was like $100 a week or 200, and you start increasing, and next thing you know, that money started to go up, and you start to go. But it made the money available for you. You had the money, you started saving. It's available for you for when you go look at that type of house. So you're not playing the guessing game of shoot, I only got 15, but that $300,000 house looked nice. It might work if you get a down payment assistance program and you get a couple of exemptions for first time home buyers and stuff. But guess what? Have that available for you and do what's necessary. Take a financial workshop course so they can talk you through this, as well as money available, saving, and how to keep doing it for it. So you'll know that. Some of the costs you'll have with that is appraisal fees, home inspections. Some appraisal might be $750, inspections $600. I'm using high estimates because we have to base that on what might happen out here, what can happen. Have I seen an appraisal $750, $800? Absolutely. $1,000? Absolutely. But guess what? It was important that they had that and they understood that prior to what it is, because it's the price of doing business. And that's what the appraiser charge to do the appraise your house, to make sure you have that appraisal. That's what that inspector is going to charge to make sure that when he's crawling through those vents and looking at all the stuff, and he's spending 4, 3, 4, 5 hours in that house to go through and look through every light switch and all that stuff. That's his time accumulated for that and what it calls for. Let me be clear. Appraisal and a home inspection is two different things. People say, "Oh, I'm getting an inspection." Some people mean an appraisal. Some people mean a home inspection. A home inspection is for the knowledge of the borrower. They know what's going on in the house. They see what's happening. For the lender, more than likely will not require you to submit that, not unless it's an exception that you're getting the down payment assistance from a company. So they might say, "Hey, let me see a home inspection you did," because they want to make sure the people's in good situation. So a home inspection usually comes prior to the appraisal. So you can look at the house to see what it is and understand what it's really going to take for that. Now, your appraisal is what the bank's going to order through the AMC. Please don't ask your lender if he had access to that appraiser, because we're licensed and we're not supposed to have access to the appraiser. We're not supposed to speak to the appraiser. It's a buffer there going through an AMC and the lender. For it. The appraiser just uploads the information to the appraisal management company, and then the lender gets it as well as yourself. But that appraiser is going to tell you the value of the home, if any repairs needed, is it valued for what they're asking for, and look through it. An FHA appraisal is going to be different from a conventional appraisal. A conventional appraisal is going to be different from a USDA appraisal. A VA appraisal is going to be different from a FHA appraisal. The appraisals are different, so don't just think that I get the FHA appraisal, but this is a VA loan. It doesn't work like that. They need to know what type of property they're appraising, and according to those guidelines through each entity that holds that, the VA administration, the USDA, the federal government, conventional, and so on. And understanding that, going through that and getting it done is so important to you. If you're a first-time home buyer, I recommend you get a home inspection. You go through there so they can tell you what's going on with the house. They can let you know the age of stuff. They can let you know what might be coming up for maintenance. And they can provide that to you so you can prepare. It's better to be prepared in the situation than just to go and it's like, I'm going to save that $600. I'm not going to get a home inspection. I'm just going to get the appraisal. And, if it's valued, it's good like that. But, you need to know about that heating and air conditioning system. You need to know about the ventilation. You need to know about that crawl space. All that stuff matters. You need to know about the windows and everything in there. You need to know about that electricity, the light circuits. All that information is important to you, and it saves you in the long run. It helps you go through that and gives you the best understanding necessary for it. But I want to be honest with you. Be careful of the people you select. As I'm going to say this again, interview them. You calling them to provide a service. Hey, my name is Johnnie Bazemore. I'm coming recommended for home inspection. Can you tell me a little bit about the home inspection process and what you do? What you're going to provide me with, and how this is going to work, for it. So you have that conversation and you understand what to expect there and go there. You walk in there and he's expecting a house. So how much is this house worth? Like, I don't know. I'm going to tell you if the light switch work. I'm going to tell you if the electric work. I'm going to tell you if this work. But this is what needs to be done. Take advantage of understanding the knowledge that each of these professionals have, and the real estate professionals. I'm going to try to get us an appraiser on and a home inspector so they can be more detailed for you and they can provide you with those things. Understand, real estate can be fraud. Some things are not some people don't work in the best interest of others. And that is a real thing here in this real estate. So you need those things to make sure you have a professional that's providing you with those details, and that they will not be scammed or frauded in a property you buying. We seen a property one time that it was the washing machine valves that go out. They had cement in them. So if they would have not had that inspection and they would have ran water for the dispatch from the washing machine, they would have flooded the house. And that would have been an insurance claim on you, which could have had your insurance go up. It could have cost you more money in the long run because you're new in the house in the first year of insurance and you got a claim already. That's a problem. That's a real problem for it. And discuss what they are. It's warning signs that you need to be aware of when you're looking at this house. You can't just look at a house from the outside and say, oh man, this house is beautiful. We don't see new construction where they done made a mistake. It's an honest mistake that the framing on the window was a little bit off, so air was seeping through it. And guess what? the people didn't know that. They didn't have no idea what you can look at that. Talk to your agent. Let them go through there with you. If it's new construction, that's why you have a realtor. So they are professionals that outline what these people have done in the houses, what's going on. They can see stuff you don't even see. Oh, somebody might say, "Oh man, these only 24-inch cabinets." You're like, "What that mean to me?" That's less space. Usually cabinets 42 inches for there in that house. And you'd be like, "Oh yeah, this hot water heater is gonna be need replacing soon because X, Y, and Z." Oh, how do you know that? This is how you know that. That's why you have realtors. That's why you have someone to guide you through it. That's why they recommend some folks to you. That's why they go through the walkthrough with you of that house so you can ask them questions, so you can be able to get understanding. If they tell you that, it don't matter. The home inspections will tell you if it matters. It is important that you go through all that information. So those are things that you have to be available when you have this money. So you're spending money to go on there. Somebody said, "What happens if I don't get the house now and then did this appraisal and this home inspection?" You saved a lot of money in the long run, because guess what? You might have found out something the seller didn't want to do. And when that happens, you can walk away. You lost maybe $1,000 instead of hundreds of thousands of dollars. That's the benefit. That's the real true value in that. And that's why, when I say that 10% down, you have a little cushion there. So those things happen. Things happen all the time with that. If you don't see it before you put the offer in, then you'll see that when that starts to happen. That's what starts to happen. And you got to be careful of this money that you have available. You have to send money to whoever's holding escrow for your down payment. Make sure wire fraud is for real, folks. It's for real. And if you don't pay attention and make sure that you have the correct information for where you're sending your money for your deposit and everything, or who you're giving that check to, it can be harmful. It can be very hurt because stuff get hacked. It happens to anybody, and through the hacking process, somebody else can obtain the funds and run away with it. So that's why it's some steps you take in when you're sending your money. If you're wiring money, please call the recipient of who you wiring it to verify their wiring instructions. Make sure you have a hard copy in front of you. It has to be line on line, as I said, precept on precept, a little here, a little there. That has to be exactly how it reads. No, oh no, it's not LLC. It's just John Doe. No, John Doe can be a different account. John Doe can be a corporation, and that wiring instructions can be totally wrong. So you need to make sure you go either in person and you get that stuff, or it's email and you're verifying that information. Verify your information when you're sending the money. I worked in title. I told people to always call me. Call me before you send any money over to me so we can verify you have it and you don't have that wire fraud and go on there. Because the deposit usually is wired to the listing agent, but you still want to confirm with them if you're wiring it. If you're giving a check, it's a certified check to it. It's handing over to them. They're going to hold that in their escrow account. You're going to get a receipt, which they're going to give your realtor so you can have it available. Because guess what? That's going to be another underwriting condition. We want to prove that that money for that deposit is in an escrow account. So we'll need that proof for the underwriter and that it cleared your account for it, because it has to come from you unless you're doing a gift. Which is a whole different game here for that home buying. Make a list. Home buyers, make a list to understand the whole intricate details of what we're doing. Understand what your deposit is, understanding closing costs, understanding down payment assistance, understanding what you qualify for. Make that list of questions that you have. And when you come, let's talk about them. Let's discuss them. Let's say, hey, you know what? This is what it is. This is what this is the questions I have. I always recommend folks that call me, hey, let's have a conversation. Let's talk. Let's be friends because we got to go through this transaction of understanding each other. And let me go through answering some of your questions. And if we want to get with the realtor, let's all three get on the phone so we all can be on the same page. Let's have the same understanding. I always tell my realtors, I'm like, hey, before you put in an offer, let's run some numbers. Let's see what it looks like for our buyer so they understand, because we'll have taxes, we'll estimate insurance, and see if, hey, this is taxes on here, want to see how you look, and it's just okay with you as we submit this offer. And be available. It's a lot of lenders I see, and I'm so excited for my lenders and my co-partners available on weekends, nights. That is great. And to do that, how do I keep everything in order? Isabel, that is so true. Is how do I keep it in order? You get a folder. You put that stuff in a folder, you stick it in that folder, you hold that folder close to you, because that's the information that you're going to need to have available. And guess what? That information helps you out in the long run. So you'll have it all available for you to see the offer you put in, to have a loan estimate off of that, and to see what you're doing. With all that in mind, when your offer gets accepted, you can look and say, hey, this is where I'm at. Let's continue to run numbers and keep going. Let's don't forget, folks, too. Don't forget about our realtors. Please include them. NAR came up with this decision, and it's an award to where the seller don't have to pay the commission for the buyer's realtor. Include that in your cost, just in case it happened. Not saying that your realtor is not going to negotiate that for you, but include that in your cost, because your realtor is providing a service. It's a worthy service. They're taking a time, energy. It's a profession. I tell people it's just like you going into work every day, punching the clock, providing a service for your employer, and they paying you. That is what they do. They are experts in the field of what they're doing, folks. But I don't want to leave the thing with, give me a call with your questions, 302-312-9860. I love to talk with you about some questions you might have, some processes, some things we can walk through forward. Understand what makes up the closing costs. Closing costs, what is that? That's lenders fees, origination costs, that's underwriting fees, that's considered a appraisal, credit report, mortgage insurance if you're an FHA, VA financing fee, or the funding fee for the USDA. That's including your title fees. That's including your escrows for your taxes and insurance that your lender's gonna get for you. That's also going to include your tax. That's going to include your title insurance. That's going to include your realtor's commission if it has, your admin commission from your realtor, your processing fee. All these fees are incorporated in that. And you say, oh, why so many fees? Somebody has to process your loan. Somebody has to go and communicate with the realtor, get the documents for it and everything. Your loan officer goes and they initiate your loan. They go out, they explain the whole process to you, they get you qualified, they run numbers for you, they sit down to give you the education you need on programs. They help you if you're going through the process of getting down payment assistance. They provide you with structural information to get you going. Your processor takes the ball once that loan in the system register, your preliminary documents uploaded. For example, your letters of explanation, your credit report, your bank statement, your pay stubs, your ID, your W-2s, um, all that information, your earnest money deposit information, all that stuff is uploaded in there so that processor can make sure it's all good, it looks good, and submit it for a review. He makes sure that we get to the table. Your processor, a good processor matters a whole lot. Can they get me to the table? That is the thing. Do they seem like a nuisance at times? Absolutely. But guess what? If you're a nuisance and you understand and you're growing from this, that is the benefit of this. That is the step you need to go to get it to where it needs to be forward. Those are your closing costs that you need. What is my real estate attorney doing? They're reviewing title. They're making sure you get clear title. They're making sure that any judgments the seller have, that they take care of it before you get in the house. They're making sure no liens is going to come against that property. So they're ensuring your safety and wealth and obtain that property and providing you title insurance. Why title insurance? Title insurance ensures that anything happens while you're in that house that happened prior to you, you're covered. It's a one-time payment for it, and it covers you for the lifetime of owning that property. Why wouldn't you spend that and getting that for that and making sure you do it? Your lender's going to get it if you don't get it. So if you don't get it, your lender's going to get title insurance to protect them. Why wouldn't you get it? That's your question. If your lender's getting it, I think it would be beneficial for you to get it already. You might see that as say optional. Don't let that be a reason for you not to get it. Optional means that, well, you don't have to get it, but you're on the hook if something happens. Certain attorneys and law firms, they won't do your settlement without that because they want to make sure you're protected. They want to make sure that you have the best situation possible for you when you get in that house and you get this thing done for it. And folks, it is so important. You got your home, you all situated, man, you moving forward, and your next thing is starting to think, hey, I've been in my home. I understand this. Now let me start learning how to invest in property. Oh, why do I need to invest in property if I own my own house? The reason you need to invest is for legacy, passing down a legacy to your kids or your loved ones or your family. Everyone should be able to pass down that legacy. Not only that one house, but the houses after them that they contain for rentals, and manage it for folks that's coming up that's renting for it. Start thinking about saving. Now you save 10%. Now let's think about 20%. We're starting to invest. We're putting that 20% up. We're starting to think about investing in the home because it's residual income. It's more money that's going to be available for you in the long run. Folks, I love to have that conversation with you on investing. Give me a call, 302-312-9860. This is Johnnie Bazemore, Creative Financing. I do residential loans, commercial loans, investment loans, reverse mortgages. All of that information is important when you going out there to buy these properties, because it's a long background of understanding the necessities of what you're doing. What's the SBA loan on investment? Those type of products and items are available. Give me a call if you're ever in that market, 302-312-9860. They are so instrumental. HELOCs is becoming a big thing right now. Home equity lines of credit where people don't want to touch their first loan and just have the second line of credit to pay off debt and to manage it a little bit more. Those are programs that's out here. Those are programs we can talk about getting OPM, other people's money for investment properties for it. Those are conversations that are not outside the ordinary, but they build that legacy of wealth. They build some home ownership here. They give you the opportunity to be independent. for it. So if you had a job now making $6,000 a month and you get these investment properties and you're making $12,000 a month, your mortgage $3,000, you have another $9,000 here. Guess what, folks? You have the same money you're earning at your job, and you're free to do some other things and keep building that portfolio, being able to manage it. Investment properties is a job. They're not sit back, just watch them and collect rent and stuff, but you got to make sure your properties are maintained. They are kept up. They are going through a healthy situation here and just going forth. Folks, it is so good to talk about real estate and investing in these properties and owning a legacy so you can pass down to your kids and your loved ones and know that they're in a good situation. I tell folks right now, what's the point of owning a home? So guess what? If something happened to you, I transition, my kids, my grandkids getting out of college, hopefully they don't have student loans, but if they do, they need a place probably clean free so they can clean that up. They can clean up those loans while they just have to worry about paying for taxes and insurance on the property. It saves them money to become out of debt, to become financially free. Why don't we want that to happen? Why wouldn't we want that to happen? And how do we make it happen? Give me a call. We can talk about how we get to the next step of the process. 302-312-9860. This is Creative Financing with JB. You can even email me at Johnnie at ycmortgagelender.com to send me an email about some questions you might have or Johnnie at Creative Financing with JB. Send me a message so we can be able to have that discussion, talk about it, understand your interests and what's gonna be ideal for you. But folks, I want to impound in you this home buying situation with today's economy is so important. It is very, very important for you to understand why renting can hinder you right now in your current situation for it and not knowing what you have available. Rents are going up, for it. Rents are becoming higher than mortgages. But we gotta remember one thing. Thanks, Isabel. Yeah, that ain't nothing but love. But we have to remember one thing, that as we go forward, home ownership is down from 1952 for African American folks right now. So, folks, I want us to make sure that we go to the next step of the process: investing, purchasing your own home, stabilizing your living environment for that, so we can go to the next step of our journey and understand this thing. Start preparing your list. Remember that you're interviewing everyone that's helping you in this home buying process. You're interviewing your lender, you're interviewing your realtor, you're interviewing your home inspector, asking questions. You're going there if you're available for the appraisal of what the appraisal consists of, to talk with them about that stuff. You're talking to your attorney to ask them what's your best course of reaction. You're doing, are you in a good situation here? You're saving money in a secure bank account. We're not leaving money under the mattress no more. We're putting it in the bank and we're trusting. If you got it in 2 or 3 banks, do that. Whatever works best for you, to have that available. But we're making a change. We're doing stuff different right now so we can reach our goal and get to the next step of our independence. Why won't we do it today? What are we waiting on? Why haven't we taken the step to become financially free? And this is a step we're having. Feel free, give me a call, 302-312-9860, or you can email me at creative financing with JB.com. I know that's long. Creative financing with JB.com. Let's talk and have that conversation. Yes, for it, and we look forward to seeing you. Y'all have a good night, and we'll talk again.